everybody. Gabe Elton here, bringing you the Austin Report, sitting in for Charlie McGrath of Wide Awake News on the one and only Rinse Radio Network. Today is Wednesday, August 20th, 2014. It was a crazy trading day today in all financial markets. The high-frequency traders once again took advantage of the headlines and the algorithms, basically whipped the average investor, brought them to the cleaners, and kind of left them scratching their heads wondering what happened today. Gold also had a pretty wild day of trading. It traded as high as $12.97 per ounce and as low as $12.89 per ounce. Currently sits right around $1,290 per ounce. Silver traded as high as $19.60 and as low as $19.34, but currently sits at $19.42. And I want everyone to pay very close attention to this price, $19.42. I think that anyone who is able to purchase silver for less than $20 will be thought of as a genius in the years to come. I can't think of any other asset on the planet that you can buy for half the price it was trading for in 1980. Lots of other analysts have looked at these numbers and say that silver is the most undervalued asset on the planet at these prices. So take advantage of that market dislocation. Take advantage of a metal that seems to be tremendously undervalued at these levels. And I'm about to give you the details on an opportunity for you to do just that. Platinum sits at $14.24 per ounce. Palladium recently reached a 9-year high. Of course, you probably didn't hear about that on the mainstream media. But palladium, which is found mostly in Russia, is at a 9-year high and sitting at a price of $864 per ounce. But before I get into the news, I wanted to let you guys in on an insane special that I'm going to bring to the show tonight. It's not available on our website. It's only available if you call in. And you're probably going to want to grab a pen and piece of paper because you're going to want to write down our phone number whenever I pass this along to you. First of all, I want to give you a background on the history of these specials and why it's nearly impossible to consistently bring you something new and better than I brought you before. And each and every time I try to do that, I feel like it's the best special that we've ever offered. And tonight, I think there's no question. You know, whenever we start thinking about what specials to bring to the show and what we're going to offer, it takes a lot of thought. I mean, basically what we're trying to do is drum up business, and in many cases we're losing money. In fact, tonight we are going to lose 40 cents per ounce on silver. And the way that we've limited those so-called losses in the past was by limiting the amount that you could purchase. And just to give you a little background, the first thing that we ever offered was 5 Silver Eagles at $99. And it was we had the best results for that particular promotion than any other promotion that I've offered since. However, there was one common theme, is that people were upset that they could only buy 5 coins at $99. So we tried several other things since then, and nothing seemed to work as well. I mean, even if we were giving it away at our cost, nothing seemed to work as well as the 5 Silver Eagle deal. So from time to time, the president of Austin Coins, Ryan Denby, will come into my office and we will discuss what are we going to offer next. And I told him, I said, Ryan, this has to be something stupid. It's got to be something so stupid that people will write about it on the internet about how stupid we are. And basically tell your friends and family, post it on Facebook, post it in the forums, and say, hey, look what these guys at Austin Coins are willing to do in order to earn your business. And he went away and thought about that for a while, and he brought back, I believe, the most amazing special that we've ever been able to offer. And what it is 1 ounce silver buffalo rounds at spot. There is a limit of 100 coins per household. You can buy 100 ounces of silver at the silver spot price You won't find it anywhere else in the United States. It is certifiably the least expensive silver anywhere. So I'll say that again. The least expensive silver anywhere. You're never going to be able to buy silver rounds at the spot price unless you're buying it from your neighbor. You can buy up to 100 ounces at that price, which is currently less than $20 per ounce. Remember earlier, I think silver at $20 per ounce is the most undervalued asset on the planet. It's half the price that it was trading at in the 1980s. Now, you got to call in order to take advantage of the special. It's 1-800-928-6468, and it's only available while supplies last. So make sure to give us a call. Again, you're not going to find it on the website. 1-800-928-6468. And don't forget to visit our website. It's www.austincoins.com. While you're there, you can find, you can do a lot of research in our Learning Center. There's a ton of information there. You can link through to our YouTube page, that I've been focusing on and building myself. Hopefully you'll subscribe to that YouTube page. You can also find past episodes of this particular show. We have a free app that you can follow the gold and silver markets by downloading it, as well as the stock markets. And you can access all of our market reports there. But the big news is the insane special, which is 100 ounces of silver buffalo rounds. You don't have to buy 100. You can buy 10, but you can buy up to 100 silver buffalo rounds at spot. Make sure to tell your friends and family. Give us a call at our main number, which is 800-928-6468. So enough promotional material. Get that out of the way. I do think it's one hell of an offer, and hopefully that we'll get a huge response from the listeners tonight, as well as future listeners on the YouTube video. But today, a lot of things happened in the market. So getting on to the news, there are some extremely important news of the day. That is, if you pay attention to the mainstream media and you think the Federal Reserve is still relevant, well, then a lot of news hit the wires today. The Federal Reserve Open Market Committee came out with their minutes from a meeting. This is, I think, sort of funny, from a meeting in July. So everybody's making trades today based on news that's 3 weeks old. And those minutes are actually a doozy. I mean, the Federal Reserve, they've lost complete control of being able to control the future of the U.S. economy. The reason for that is because the rest of the world is moving away from the dollar. I mean, haven't you heard Greenspan? Haven't you heard Bernanke? Janet Yellen, don't you know that the gig is up? Toto has pulled back the curtain and found out that your toolbox is empty. But, there's a lot of other people out there that believe that these minutes are actually important. The trading world certainly feels that way. The financial world feels that way. They think the Federal Reserve's relevant. The high frequency traders think the Federal Reserve is relevant. And what they do is they sit around salivating to hear what they have to say behind closed doors. And everyone in the world goes out and makes trades based on these minutes as if the Federal Reserve is still relevant. And because of that, we have to dive into this madness. You listeners might remember a theme that we touched on during my last show that was 2 weeks ago. And that day, a NATO general had come out and said that an incursion by Russia into the Ukraine was likely. Gold went up $20 that day. Stock markets went down. And whenever I came on that night's show, I pointed out how ridiculous that was. How ridiculous it was that the market needed a NATO general to come out and say that an incursion by Russia into the Ukraine is likely. I didn't need a Russian general to tell me that. The stock market didn't need a Russian general to tell it that. Common sense will tell you that. Most traders that are wealthy should already have known that. And my point was there was no reason for gold to go up $20 that day because the fundamentals hadn't changed any from the day before. And the point was being that this world and the entire markets are controlled by headlines, even if they don't mean anything. And that is what has happened today with today's trading, is that people who think the Federal Reserve is still relevant goes out and makes trades based on information that's 3 weeks old that they decided on in July, and nothing changed fundamentally, but yet the markets reacted as if this was some kind of earth-quaking news. And so the exact same situation just happened today with the release of the Federal Reserve minutes. Stocks were whipsawed based on the original headlines, and then the Fed apologists came out and rewrote those headlines and wrote articles of their own, and then the stocks went back up, and everyone was scrambling to make trades as if the FOMC minutes were gospel, as if the Federal Reserve has any tools left in its toolbox, as if the Federal Reserve will really be able to raise rates anytime soon. The thing is, the rest of the world has decided that the Federal Reserve is irrelevant. So it doesn't matter. They're making agreements. They're doing deals that are moving away from the dollar on a daily basis. You think China is going to start buying U.S. Treasury bonds again if the government were paying 3%? I don't. You think Russia will be buying U.S. Treasury bonds again anytime soon, even if the U.S. government was paying 6%? And you could go on down the list for the entire BRICS nations and most of the rest of the world, including developing countries. Yet, the entire financial world is still consumed by headlines, even if those headlines are meaningless. And what I'm going to bring to you tonight is several articles along with several video clips to prove to you how maddening it is whenever you have a group of Fed apologists out there acting as if the news that broke today, and the major headline from the minutes were that the Federal Reserve may raise interest rates sooner than expected. Well, then the apologists came out and said how that was great for stocks because it was such a sign that the economy was improving and we still haven't hit our inflation targets yet. And so I want to go through a couple of these articles that were spawned today based on the news that broke. And I want to show you how different all of these articles are, even though what's being reported on are the same minutes. And the first one is from Forbes, and it says Fed minutes show some pushing for rate hike sooner. So if the Federal Reserve is going to raise rates, that means they're going to tighten the economy, which means that's bad for stocks. I mean, any economics class will tell you that. Higher rates are bad for stocks. Well, this particular article from Forbes agrees with that. They said before Wednesday, if you asked the average Fed watcher when she expected the central bank to raise rates, she would have likely said mid-2015. However, the minutes chronicling the Federal Open Market Committee's July meeting show that point is up for debate among Fed governors. The minutes released Wednesday afternoon show the FOMC becoming increasingly divided about the ideal timeline for a rate hike and the appropriate means for communicating that timeline without spooking financial markets. So basically what they're saying is, there is a debate amongst the committee about raising rates, but they don't want to spook financial markets. That's the last thing they would want to do, of course, because that's who they work for. It goes on to say, the minutes also stated that inflation, the second pillar of the FOMC's mandate, had firmed. Most participants stated beliefs that move toward the 2% goal will continue, as will labor market progress. The question becomes, how fast and what do we do about it? Many committee members agreed a quicker than expected convergence toward inflation and labor market goals might make it appropriate to begin removing monetary policy accommodation sooner than they currently anticipated. Some went so far as to say the progress is already sufficient to call for a relatively prompt move towards reducing policy accommodation. The members were worried about overshooting committee goals. And it goes on to say there was a knee-jerk reaction lower immediately after the 2 p.m. release, but the three major indices eventually restored gains established earlier in their day. Near the end of trading, the S&P was up 0.3%, the Dow Jones was up 0.4%, and the NASDAQ composite was up 0.07%. So they have an article here from Forbes saying that the Federal Reserve is going to raise interest rates, which should spook markets. They come out in their minutes and announce that they were going to be probably raising interest rates. I don't think that's true, but they say they will be raising interest rates possibly sooner than later, and the stock market still goes up. Does that mean that even the stock market thinks the Federal Reserve is irrelevant now? I don't know. But you go on to Bloomberg, and Bloomberg has a totally different outlook. They say S&P 500 nears a record on bets that Fed will support economy. So Forbes writes an article saying that they're probably going to raise rates sooner than later, which should be bad for stocks. Bloomberg reads the same minutes and says S&P nears a record on bets that Fed will support the economy. Well, how can raising rates sooner than expected, how can that cause someone to bet that the Fed is going to continue supporting the economy? That's the madness, is that all of these people think the Federal Reserve is still relevant. And it goes on to say that U.S. stocks gained for a third day, sending the Standard & Poor's 500 index to within 2 points of a record. As minutes indicated, the Federal Reserve will continue to support the economy amid uneven gains in the labor market. It goes on to say, to state low inflation. You're kidding me, right? Bloomberg, low inflation? I just don't get it. You've got food near an all-time high. Inflation is spiraling out of control when you go to the grocery store or fill up your tank. And Bloomberg is telling you that low inflation is a reason that the Fed will continue to support the economy. I don't know what bubble they live in. And they say that inflation remains below the Fed's target. It says 3 rounds of Fed stimulus and better than estimated corporate earnings have sent the S&P 500 higher by 194%. It says 8 out of 10 primary groups in the S&P advanced on the news. How can that be true? It can't. But Bloomberg wants you to believe that stocks are going to continue higher. Reuters wants you to believe that stocks are headed higher. They say that Dow, S&P 500 rise after Fed minutes reassure on rates. But wait, didn't they just say that there is an argument among the board that rates should be raised sooner? However, Reuters wants you to believe that the Fed minutes has reassured the market on rates. And they go on to say that the stocks paired gains immediately after the release, but the Dow and S&P 500 returned to positive territory with a little more than an hour of trading left in the regular session. The market was absolutely being driven by the Fed. It started out strongly, then it looked like a bit of capitulation before the statement came out, and then we obviously saw a big sigh of relief. And that was Drew Wilson, an equity analyst at Fenimore Asset Management. So Bloomberg says the Fed will continue to support the economy. Reuters wants you to believe that the Fed has reassured the market on rates, whereas Forbes says that the Fed minutes show some pushing for rate hike sooner. Now, there's a lot of convoluted information amongst these 3 articles that were written about the exact same Fed minutes, from 3 different financial news services. So what are you supposed to do? Well, I think what you're supposed to do is what Warren Buffett is doing. I think what you're supposed to do is what George Soros is doing. And that's what I'm going to cover on the backside of this break, is that Warren Buffett and George Soros are both planning for a huge market collapse. And we'll talk about that on the backside. Hope to see you there. All right, Gabe Elton with the Austin Report, back on the one and only Rinse Radio Network, sitting in for Charlie McGrath of Wide Awake News. So I covered a few things earlier today. One of those is the special that we're offering, 100 ounces of silver buffalo rounds at spot. You're not going to find it anywhere else in the country. I would, in fact, challenge anyone to be able to find silver rounds at the spot price, as I mentioned earlier, that you're not buying from your neighbor. So best price out there. I would advise everyone to take advantage of it. You can reach us directly at 1-800-928-6468. Only available if you call in and mention this particular special. Again, it's while supplies last as well. So we talked about how everyone goes out and makes trades based on headlines that really don't matter. And then when these financial news services report about these headlines, you get 3 different stories from 3 different agencies. Forbes says that, they're going to raise rates soon. Bloomberg says that the S&P nears record because the Fed will continue to support the economy. Well, raising rates is not continuing to support the economy. Of course, I think they should raise rates, and we're about to talk about that as well. But then if you go to Reuters, it says that the S&P 500 rise after Fed minutes reassure on rates. But they're arguing about rates. How can that be reassuring? So what are interest rates? Interest rates are a reflection of the value of money. If interest rates are at 0%, what does that say about the value of the money? Low interest rates steal from savers. Low interest rates steal from those on fixed incomes and hurt the poor the most. In these low interest rates, they were never for borrowers. There was simply a ploy for the banks to borrow from the Federal Reserve at 0% so that those banks would invest that money that they are loaned at 0% into U.S. Treasury bonds that are paying 1%. And that's not an exact number, but it's extremely low return, but it's guaranteed free money. Guaranteed free money. That is the definition of free money. And that is the definition of the reflection of the value of our money. And that is that it's worth the paper that it's printed on, which is nothing. And when the demand finally started falling, when these banks had had enough of U.S. Treasury bonds, well, then the Federal Reserve pulled out quantitative easing 3 and just started buying the bonds themselves. It leaves the Federal Reserve as the largest holder of debt in the world. They own more of the United States debt than any other country in the world. And that's why they're irrelevant. That's why they've lost credibility. And I shared with you all of these conflicting information that you're getting from these financial news networks. Well, let me just lay it to you real simple and straight. The smart money, the billionaires, know something catastrophic is coming. And this particular report comes from Reuters as well. And it says Buffett, talking about Warren Buffett, Buffett hoards cash. Individuals' holdings hit 14-year low. And it goes on to say that individual investors have been cutting back on cash in portfolios. So what they're saying is the average guy, their individual holdings are at a 14-year low. What they're saying is cash. They don't have any cash sitting on the sidelines. They're 100% invested into stocks. But Warren Buffett has been doing the exact opposite. It says individual investors have been cutting back on cash in portfolios. The exact reverse of what Warren Buffett has been doing at Berkshire Hathaway. Who do you think has got it right, they ask. Cash at Berkshire Hathaway stood at just over $55 billion in cash as of June 30th, which is an all-time high and 2.5 times the level he's in the past said he likes to keep on tap to meet extraordinary claims at his insurance business. So I'll read that again. Especially pay attention to the part, extraordinary claims at his insurance business. What does that mean? Does he think something catastrophic is coming either in the financial world or some sort of terrorist attack? Because cash at Berkshire Hathaway is just over $55 billion, which is an all-time high and 2.5 times the levels he's had in the past. And he said that it's 2.5 times more than he normally likes to keep in order to meet extraordinary claims at his insurance businesses. The cash is up over 50% in the last year. He goes on to say Buffett's green pile is in sharp contrast to individual investors who've cut cash in their portfolios to 15.8%, which is a 14-year low. He goes on to say, to be sure, businesses and individuals hold cash for different reasons, but Buffett has used Berkshire in part as an investment vehicle through which we can interpret his views on the market, or at least the prices of some assets in them. Berkshire, of course, has some difficulties putting cash to work not faced by your average dentist or lawyer, and that it tends to make very large investments and as such may need to be more patient than smaller fry. So it is quite possible Berkshire Hathaway is waiting for the right acquisition to come along. So what does it mean if Warren Buffett has more cash on the sidelines than he's ever had in the history of Berkshire Hathaway? It means that he thinks something catastrophic is coming. He's got $55 billion sitting in cash. His protege, I don't even know if it's his protege, but it might as well be, George Soros, has put a $2 billion bet that the stock market is going to collapse. And this is from the Washington Times. It says billionaire businessman George Soros has upped his ante in what some industry insiders say is his long-running bet that the United States will suffer a massive stock market collapse in the coming months. His financial filings show that he's been predicting such a collapse in the S&P 500 index since late 2013. And basically what these people are looking at is what's called a 13F filing that Soros made with the Securities and Exchange Commission. And he has increased his puts on the S&P 500 by a massive amount between the first and second quarters. By the numbers, Soros boosted his position to 11.3 million put options, bringing the dollar value of his position from 299 million to 2.2 billion. And people are calling it the Soros put. And it goes on to say, the last sentence in the article says, investors generally watch the quarterly filings because they give a good indication on where smart money is choosing to invest. Well, guess what? Smart money isn't investing in the stock market, says Warren Buffett. He would rather have cash. George Soros, not only is he not investing in the stock market, he's making bets that it's going to collapse. Meanwhile, Bloomberg and Forbes and Reuters want you to believe that the Federal Reserve is going to continue supporting the economy even though they're arguing about raising rates. That's the madness. That's the reason why they're irrelevant. George Soros knows it's irrelevant. Warren Buffett knows that they're irrelevant. And I'm going to go on and show you the reason why they are irrelevant. And I'm going to let you guys listen to just a few videos that many of you might have heard before that is going to kind of give you the reason why I see, and I'm sure many of you see, the world the same way, and that is that the Federal Reserve is irrelevant. And here's why. I'm going to play this first video. This is Alan Greenspan explaining that the Federal Reserve is above the law. Here we go.
What is the proper relationship? What should be the proper relationship between a chairman of the Fed and a president of the United States?
Well, first of all, the Federal Reserve is an independent agency, and that means basically that there is no other agency of government which can overrule actions that we take. So long as that is in place and there is no evidence that the administration or the Congress or anybody else is requesting that we do things other than what we think is the appropriate thing, then what the relationships are don't frankly matter. And
so did you just hear that? Alan Greenspan, and many of you might have heard that before, just admitted that it doesn't matter because there's no other agency of government that can overrule or override any decision that they make. Gabe Elton with the Austin Report, back in for Charlie McGrath of Wide Awake News on the one and only Rinse Radio Network. I do want to make an announcement. Tonight will be my last show until late September. I have a couple of things planned, going to head to the mountains to try to take an elk with a bow. So I'm going to be out for a couple of weeks, and it's going to mess up the programming a bit, but I will be back in full force the latter part of September and on every 2 weeks within that date, or after that date, I should say. So make sure to tune in and catch the news. So we talked about Reuters and Bloomberg and Forbes want you to believe that the Federal Reserve is going to continue supporting the market, but meanwhile, people like Warren Buffett and George Soros are actually betting on a huge market fall. And if you don't believe that that's enough, Alan Greenspan, the guy who said that the Federal Reserve is above the law, was recently interviewed on Bloomberg, and he said that a significant market correction is likely. So you have all of these people. It's sort of like the rats leaving the ship, or the roaches running from the light. At least he'll be able to say that, if you didn't, I warned you, maybe you didn't see my interview on Bloomberg. And here's exactly what he had to say about the coming market correction.
But the stock market has recovered so sharply for so long, you have to assume somewhere along the line we're going to get a significant correction. Where that is, I do not know. I have always...
So here we have Alan Greenspan saying there's going to be a significant correction. You have George Soros saying there's going to be a significant correction and putting his money where his mouth is. And you have Warren Buffett doing the same thing. But yet everyone is still trading on Federal Reserve FOMC minutes. It's ridiculous. And that's one of the things that I think many, I may be preaching to the choir, talking with my listeners here tonight. People may already know that, but the Federal Reserve was put into place to impoverish a nation. It was put into place to replace the gold standard and to make people believe that the U.S. dollar has some validity. And the fact of the matter is the U.S. dollar and the U.S. government has defaulted several times. The first default was in 1933 when they confiscated gold. They also defaulted in 1971 when Nixon removed removed foreign nations from being able to exchange dollars for gold. He closed the gold window. That was a default. Yet people today, 40, 50 years later, have forgotten about that. They think that the U.S. dollar has some worth, has some value, even when the Federal Reserve is telling you it's worthless by offering 0% interest rates. Even when the bankers, not the central bankers, but the banks that the central bankers work for are able to borrow money at 0% and buy a treasury bond at 1%. That tells you what the value of your dollar is. And the reason why they're irrelevant is because they say they're above the law, number one, and they won't tell you where the money went. And here's a very striking video from Ron Paul and Ben Bernanke. And basically they're talking about whether or not gold is money. And listen to his response. And a lot of you might have heard this as well.
If you could answer another question, because I'm curious about this. You know, the price of gold today is $1,580. The dollar during these last 3 years was devalued almost 50%. When you wake up in the morning, do you care about the price of gold?
Well, I pay attention to the price of gold, but I think it reflects a lot of things. It reflects global uncertainties. I think the reason people hold gold is as a protection against what we call tail risk, really, really bad outcomes. And to the extent that the last few years have made people more worried about potential of a major crisis, then they have gold as a protection.
Do you think gold is money?
No.
It's not money. Even if it has been money for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset. I mean, it's the same. Would you say Treasury bills are money? I don't think they're money either, but they're a financial asset.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money. I yield back. My time is up. Thank you.
So Ben Bernanke just said that gold isn't money. And Ron Paul very intelligently asks, well, why does the Federal Reserve hold gold and not diamonds? Because gold has been money for 6,000 years. Silver has been money for thousands of years. And one day, someone pulled the curtain over our eyes and made us believe that a piece of paper has value and that this group of men can get behind closed doors making decisions that are going to affect the entire financial world because of this power that they supposedly have. And you know, I'll hearken back to Dorothy and Toto and the Yellow Brick Road and what happened whenever the curtain was pulled back. It was a big facade. It was a big show. There was no power. There was no legitimacy. And that is true still today of our Federal Reserve System. It's all a scam where they make you believe that they have value, that they have power, and that they have control. But if you watch this Alan Grayson and Ben Bernanke, I don't think I have time to play it, but he wouldn't tell Alan Grayson where $500 billion went. He refused to tell an American congressman the banks that they were loaning money to. This is the people that the rest of the world is increasingly moving away from because they see the madness. But these are the people that the entire financial world makes trades based on what these guys are going to do next, as if it really matters. It's not going to matter when the dollar is worthless. It's not going to matter when the dollar it won't buy you anything. It's not going to matter whenever a loaf of bread is $20 an ounce. Do you think it's going to really matter what the Federal Reserve says in their FOMC minutes? And that's where we're headed because the rest of the world has decided the gig is up. And they see through the lies that the Federal Reserve is feeding us. So if you guys would please visit our website, you can visit us at www.austincoins.com. When you get there, you can go to our Learning Center. There's a ton of information there. In fact, I've written many of the articles that you're going to find there. You can sign up for our email reports that we send out about twice a month. You will get an update from us, market update, or hear about our next special. You can also download our free app. If you have a smartphone, you should definitely download the Austin Coins Market Tracker app. It follows the gold price. It follows the silver price. There's historical charts on there. You can look at the Dow, the S&P, all the way through. There's all sorts of different things there. You can actually link right through to our website and purchase coins from it if you'd like. A very handy tool, and it's absolutely free. You can link through to our YouTube page. I would hope that you would subscribe to that page. We also have a very interesting Pinterest page with a lot of pictures and photos of rare coins that we deal in. But the most important thing that I want to get through to you tonight is 100 ounces of silver at spot. We, as I mentioned, are losing 40 cents a coin. And looking in the chat room, some people might not believe that. What it is a loss leader tactic. We're willing to sell you coins at a loss in order to gain your business. The reason for that is because it's much cheaper than paying Glenn Beck to promote Austin Rare Coins. It's much cheaper than paying Laura Ingraham to promote Austin Rare Coins. It's much cheaper than producing a television commercial that costs hundreds of thousands of dollars. I would rather pass those savings along to you and lose a little money to gain your business. In the long run, it is a cheaper solution for Austin Rare Coins to pass along coins to you at a loss in order to gain your business. Now, obviously, we can't make that up in volume, so we do have a limit of 100 coins per household. But it's something that you're not going to find anywhere else in the country. It's the lowest priced silver in the United States. And if you are able to take advantage of it and don't, you're missing one of the best opportunities I think you're going to have in a lifetime, because silver under $20. Now, and here's the catch. Silver is under $20, but can you buy it for less than $20? In this particular instance, you can. So you are actually obtaining silver, physical silver, for less than $20 an ounce, and you can buy up to 100 ounces. So if you review everything that we've talked about tonight, which is the madness of a financial world that's gone crazy based on headlines from an FOMC meeting that was held 3 weeks ago in July, as if something like that matters. And then you have all the financial news networks taking you in 3 different directions. Some are saying that the Fed's going to raise rates, and there's an argument inside of the board about when they should raise those rates. Reuters and other news agencies want you to believe that everything is peachy and that things are great and that the economy is going to continue higher. But Warren Buffett and George Soros and Alan Greenspan would disagree with that. The smart money is gathering cash. The smart money is buying gold. I mentioned to you 3 shows ago that some of our biggest clients that have a B before their name, they're billionaires, not millionaires, have started to get back into the market. This is within the last 2 to 3 months. And this is a trend that is developing. The smart money is moving now. And as I've warned you, and I think many of you already know, that you better have your physical gold and silver positions before they decide to start buying. Because when they do, there are going to be long delays, there's going to be limited products, and it's going to be one hell of a time for you to actually get it in your hands. And I guarantee you this, you're not going to be able to buy it at spot. And that's what you can do with this particular deal. 100 Buffalo silver rounds. You can get as few or as many as you'd like. Well, I shouldn't say as many. You can get as few or up to 100 ounces at spot. So give us a call, 800-552-4109. Have a good night. See you guys late September.